Is this a situation where this could be the catalyst that gets folks above the range of $70 to $90 a barrel that they've been talking about for quite some time with benchmark crude prices?
Look, I would say that the rally has come a little bit too early. We've been calling for 90 plus in the summer based on fundamentals. But like you highlighted, a lot of this is geopolitical risk premium. And yes, I think if that were to persist, we can get prices kind of staying above $90 for some time. But we actually don't think we are going to get supply losses. Both sides, yes, there's a lot of rhetoric right now, and there will be some retaliation. But I don't think either side necessarily want to cross the red line that leads to, sustained attacks or that would actually lead to anything in terms of supply losses for oil. So it's a little bit of geopolitical risk premium priced in. We do think that should start to fade in the coming weeks. We've seen similar situations during the initial kind of Gaza or Israel-Gaza kind of conflict starting, but they do tend to fade unless and until there's an actual supply loss.
Amrita, geopolitical risks are always present in oil, but largely for the last 10 or 15 years, even beyond that, geopolitical risks have seemed to be very, very short term for the oil markets overall. I think back to even just recently with the Hamas-Israel attack that happened back in October. We thought oil prices would spike. They've stabilized since then. I think about Iran's Qasem Soleimani, their top general, and when he was killed and what it could have done. Things don't seem to boil over as much anymore. Is that a concern right now for oil bulls?
I don't think so, in the sense that I do think the market and the bulls have recalibrated their trading strategies. You're right, like this is not 2011 when, we lost Libyan production and prices did surge and stay there. And again, during the Iranian sanctions around 2012, 2013, it was similarly, we had 4 years of above $100 oil prices. Right now, or since then, I would say U.S. shale has been a big part of why geopolitical risk premiums tend to fade quickly. And now, of course, OPEC Plus have a lot of spare capacity as well. Having said that, U.S. production growth is slowing, and OPEC Plus continue to, they want to maintain balance in this market, so they're not going to be in a rush to bring barrels back. So there is an opportunity for prices to rally, but we're not expecting prices to, rally or sustain above $100, which some people are calling for, because there are mechanisms through which you can get additional supplies to the market.
Amrita, before we let you go really quickly, what is your target price for oil, U.S. benchmark and Brent?
We've been calling for $85 Brent average for the year, right from the start of this year, and 82 for WTI. We do think prices are going to trade in the 90s. We're maintaining that view. I don't see any reason to change that because physical fundamentals are actually very strong. But like I said, we could pull back a little bit before we have a much stronger rally in the summer.